Hey everyone, welcome. We just got the closing bell for Tuesday, May 28th. We were expecting a mostly quiet, not too eventful day, trading sideways, and we got exactly that. As expected, volume was very low. So we haven't exited our high volume or low volume period yet. And we're really probably going to see at least a little bit of a pickup tomorrow in terms of volume. And then hopefully by Thursday, we get some more normal volume, especially with the GDP report that is coming out on Thursday. So that could potentially give us some directional movement instead of this choppy sideways movement. And as we went over in the weekly market review last Friday and in the morning session this morning, our expectation is that we have a slightly higher probability of us coming down rather than going up. I would say maybe a 65 to 70% chance of us coming down instead of going up, or just chopping sideways. But I would think that we could at least get down to this EMA 20, which is similar to this horizontal level at this point. We did reach it at a couple of days ago, so on Thursday. But that was more of the sideways movement. So we're probably looking at a deeper pullback than just this purple line. And so temporarily, we can lean our portfolios bearish. But for now, if you're not as confident, if you don't want to take that chance, then you just wait, stay neutral and wait until we actually get a clear direction, either up or down. So by staying neutral, you can be in cash, but the other way of doing that is going long something strong, going short something weak. And that way, either direction we break, we still make money net on net. So let's take a look at what our sectors did today. We were talking about how this market has really been propped up by technology and SMH, or semiconductors. So we want to see if that continued into today, if those are still our strong sectors, or if we're starting to see money bleed out of any particular sectors. So we'll take a quick look. I'll just look at XLK. XLK up, but we did get this kind of hammer right here. So that's not too good of a sign on XLK. And if we look at SMH, SMH is strong. Probably still hangover from NVIDIA. Yeah, so NVIDIA continue to gap up and make new highs. This is super strong. This is obviously very parabolic. At this point, we're above our +3 ATR. I'd be very careful with NVIDIA, but this is probably all in anticipation of the stock split that was announced at their earnings. So SMH, can it keep on going? Maybe, but it is parabolic and it's probably not going to stay up there much longer. At some point, it does have to pull back. That is not a good trade to try to short this just because it's gone up so much, because it could always just chop sideways. I wouldn't try shorting this, but just know that it probably isn't going to continue upwards. And with NVIDIA doing this, this is a 2 point something trillion, $3 trillion company. Let's take a look. I don't want to put my foot in my mouth. Let's see where your market cap is. $2.6 trillion market cap on NVIDIA. It's going to be one of the largest stocks in the entire market. So for it to move up so high and the S&P 500 to just kind of chop sideways, that's not really great news, right? That means that there is a lot more forces moving down in order to get this into equilibrium. Another thing we want to look at is the Dow Jones versus the NASDAQ, or even small caps. So we'll take a quick look at small caps. Small caps weak. We went up, couldn't make it to these highs over here, which weren't even all-time highs. Yeah, not even all-time highs. We didn't quite make it to these highs, local highs right here. We pulled back to our MA50 and then we bounced up, but today really just sideways, down 0.11%. And if I look at my Dow Jones pulled back below the the MA50. So we broke below the MA50. We actually broke the MA90 and then came back above in between the MA90 and MA50. That's definitely weakness in blue chips. And then if I look at my QQQ is up, but only up 0.38%. This still looks like a strong uptrend, but with all the other sectors pulling back, this probably cannot last for that much longer. So this is propped up by NVIDIA and propped up by these semiconductors that are moving in sympathy with NVIDIA. So this really does look like a topping out behavior, at least a local top in the markets. And I would just be very careful here. And like I said, maybe lean a little bit bearish inside of your portfolio in the short term, short to medium term, not for super long term. Let's take a look at let's see what happened with VIX. VIX continued to move upwards. We are not, we're at the kind of lower portion of the normals in 2024. So I'd expect this to continue to creep higher and at some point start to spike up again, but not in the immediate future, not in the next week. Maybe in 2 to 3 weeks or 4 weeks, we might start getting that spike. But it's too early to talk about that. Right now, we're just expecting it to maybe float a little bit higher towards the 14 area and then bounce between 12 and 14, just like we did for most of 2024. And then we'll take a quick look at our CPC. CPC is still at 1.0, or I don't know if this just wasn't updated, because that's the exact same number as this morning. Yeah, so I won't draw any conclusions from that. So I really just, at this point now, am just very interested in these sectors. Where did money move today? And then this morning, we identified the retail and consumer discretionary sectors as weak areas. So let's take a closer look at those two as well. Okay, let's just look at today only. Silver got a big bid, gold up significantly, and then it looks like we went semiconductors, probably because of NVIDIA. Energy bounced, technology retail was stronger, not that strong though, it's only up 0.17%. Everything else was down, so everything else was weak. So consumer discretionary in the middle range, and what did really poorly was healthcare, industrials and financials, and staples. Interesting. So let's take a closer look at XLY, because it did look very weak this morning. And if it continues to look weak, then when the overall markets start dipping, actually what will happen is money will start to go into safer, more defensive sectors. And then we would expect discretionary to catch up and retail to catch up on the way down. So they'll end up being towards the bottom. So they actually represent a better opportunity than something like XLP, which looks like it may have already sold off. I have to look at a chart to be sure, but we'll look at that in just a moment. There's something, okay, silver and gold. Let's throw GDX in here, because this morning we identified, or actually over the weekend, I identified GDX as a good sector. So I'll throw this in, GDX, and see how that stacked up today. GDX towards the top. So ahead of gold. Oh, wait. No, sorry. GDX at the very top. Other than silver, GDX did the best in terms of all these sectors. So it looks like money is moving to metals for whatever reason. If money is moving into metals, then we got to look at other commodities like crude oil. So XLE is up here. So crude oil probably did very well as well. Yeah, huge bounce off of this consolidation area right here. And it just went right up a little bit above the MA200 right here. So we could have a turnaround. We could have turnaround, probably come and match these previous highs right here, or the recent highs right here. So we could be in for a little short-term upward movement in crude oil, which could help XLE, and more specifically the oil stocks. So just a couple off the top of my head: CVX, Okay, looks like it sort of bounced off near that MA200 level as well. Overall, it's still an uptrend, series of higher lows. You could argue that that broke the downtrend right there, but if it moves up back above that MA50, then that would still be an uptrend, and then you would redraw this line like this. Okay, and then let's look at just a couple more. British Petroleum, maybe. Not looking nearly as good, but it did bounce up back up above its MA200. XOP, XOM, ExxonMobil. There you go. Stronger, definitely stronger than the other two that we saw. Kind of in no man's land right here, but this is a horizontal. And this horizontal support right here, there's a gap right here, there's a gap right here, and then a peak right here. So that is a horizontal support. So it's looking like maybe not quite yet, but oil stocks would be on my watch list for the near future. So XLE looking like it could start catching a bid in sympathy with the silver and the gold. Generally, basically, what that tells us is that there's this general feeling of unease that's starting in the market. But people are probably not feeling as great about our GDP. We do have a GDP report coming up very soon on Tuesday or Thursday. Today we had consumer confidence. Let's see how that came in. Hot. So it was actually higher, much higher than consensus, and much higher than prior. That's interesting. This came out at 7. Let's see what happened at 7 o'clock in the markets. Not much. This market just didn't care about the consumer confidence. It did turn around from moving lower, but then all it did was chop sideways, and then we moved lower anyways, and then bounce back up to go flat. So this market really didn't care about the consumer sentiment, which is interesting, which means that either the main traders were not back from vacation to care yet to actually move to take positions due to consumer confidence, or the institutions, they're just not paying attention to it right now. They just don't care, which means they have their agenda and they know what sectors that they're going into. Obviously right now the hot ticket item is the SMH and Nvidia, but once that is over, where's their money going to go? Probably not going to continue in the XLK and the SMH. So we were looking at our sectors. Where'd it go? Here we go. So GDX catching a bid over here, and it is looking very strong. I wouldn't be surprised if it makes a higher high in this wave upwards, which might be an all-time high. Nope, not even close. Okay, so let's take a look at that XLY. We'll take a closer look. Yeah, it's not looking great at all. This was a pretty aggressive downward move on Thursday. So it looks like we're probably just consolidating a little bit right here. And then we'll go down and retest that MA200. So let's see what's weak in XLY. There we go. Lululemon looking very weak. Caesars Entertainment also very weak. Whirlpool and VFC also, but it's been chopping sideways. So once it breaks the choppy movement, sideways movement, it can really go. Same with Nike, sideways. Expedia starting to turn down. This looks like a good short. EXPE, Lululemon, Caesars Entertainment. Okay, we have earnings coming up on Lulu. So we'd most likely avoid that unless we were doing specifically an earnings trade. But I'm not going to get into all of that right now. So we're just going to pass up on this. CZR. CZR. Yeah. Let's see where we are in terms of our Keltner channels. We're still at our +2 or maybe +1.5, or I'm sorry, -1.5 or -2 ATR. This could still continue. This could keep on going. CZR looks like a good short right there. And then Whirlpool. Whirlpool has been moving down pretty aggressively. So gap down, trade off, sideways movement, gap down, trading downwards. And we should probably be at our, yeah, we're at our -3 Keltner channel already, chopping sideways. And then we'll see, it will probably chop sideways until we at least get to this -2 ATR and then potentially trade back down. So Whirlpool is definitely a good short, but if we want to efficiently allocate our capital, we wouldn't go in just yet. It is encouraging that it came to that +2, -2 ATR and then traded off. We opened right at the -2 ATR and we completely traded down in this doji, or I mean, I guess this would be inverted, technically an inverted hammer with no body. So that is actually a pretty bearish signal right there that we already hit the -2 ATR and then traded back down. But it could continue to trade sideways for a little bit before it moves down also. So Whirlpool, I would be okay going in immediately, but I would like to see a confirmation. Confirmation bar would make me feel a lot better about going in at this particular moment in time. So Lulu, not Lulu, Caesars. Caesars bouncing off the -1 ATR and then trading down a little bit more than halfway towards the -2 ATR. So this is looking pretty good, but again, maybe a confirmation bar before going in. So both Caesars and Whirlpool are looking like really good shorts if you are inclined to make your portfolio a little bit more bearish, or the potential mild pullback in the S&P 500 that we're anticipating, and weakness in the discretionary sector is what we're counting on to lead, or not necessarily lead the way down, but it has a lot of room to move on the way down because of what we saw earlier. Let me just remind ourselves of how that looked. Okay, so XLY, what is this main average percent? Oh, it is at the bottom. Why was I thinking it was in the middle? I might have looked just on the day-on-day change. Yeah, XLY was in the middle on the day, not on the, okay. So it is the weakest sector. It is one of the weakest sectors, or basically the weakest sector right now. And if we look at the chart, it's got plenty of room to keep on going down. So at the very least to that MA200, and if it breaks that MA200, then we'll see if it breaks this low from the previous time it tested the MA200. And if it breaks that, then we're probably filling this gap down here. So there is a lot of room for shorts in the discretionary sector. So that's where I would put my focus on either balancing out and neutralizing my portfolio or getting my portfolio to a slight bearish tone. And then the best candidates look like they're in the consumer discretionary sectors. Okay, so tomorrow, what are we going to expect? Probably more similar to today. Probably continued choppiness, not super directional, maybe a little bit better volume coming in. And then Thursday, we'll see what GDP has in store for us. We'll also see if volume comes back because the traders are back in the markets, institutional traders are back in the markets, and then they have a major report to key off of. They have a little bit more information and they can start putting capital to work. And then we have Friday. And then Friday is kind of, well, do we take risk over the weekend or not? So it may end up being somewhat muted as well. And so maybe the real volume comes next week. But either way, we do have potential for this Thursday. And we should probably get our portfolios neutral or just stay slightly bearish ahead of the GDP report on Thursday. Okay, so that's it for today, guys. So I will see you tomorrow morning and hope you guys have a wonderful rest of your day.